holiday to host this webinar, but we know that it's going to be very insightful and that you will learn a lot from today's webinar. As we all know, it's another Bujeti webinar series, and today we'll be discussing funding options for startups and SMEs in Africa, particularly Nigeria. And we'll also be going over how businesses can manage their finances for growth and to better position themselves for funding options, right? Just like a bit of housekeeping before we begin or introduce any of our speakers, we would be, this webinar will be recorded definitely, so that if there's any point in time you missed the speakers, you would have the opportunity to listen again and probably like gain one or two more insights. Also, we would be sending these webinars to your emails as well, so you won't be missing anything. Then you can always ask questions as the webinar is ongoing. There's the Q&A part of the screen where you can always drop your questions at any point in time when you have questions, or any point in time when a speaker is speaking and you just want to like clarify certain things, right? And then I'll bring them up from time to time. Finally, we would be having like polls. Polls will be conducted at different points during the webinar. Please, we ask that you take this polls really. They're actually important to help us like gain insights into certain questions that you have. This could also inform some of the questions that I'll be asking the speakers, and possibly help us create other information for you or other materials for you regarding these questions that you've asked or the polls that you've taken, right? So let's get into it. The first speaker we have on the call today is Samy. Samy is the COO at Bujeti. I call Samy the operations guy because Samy is always there to ensure that things are working smoothly, there are no hiccups anywhere. And beyond being like the operations and compliance guy at Bujeti, previously Samy worked as like the CEO of SmartSoft, a company in Europe, and he also holds like 2 MScs in business administration. So you know that Samy is your guy when it comes to business administration, business finance, business operations, name it. Then our other speaker is Ekpagha. I hope I didn't murder her name. She is a finance and investment professional, and she's the senior investment analyst at We Capital. We Capital is a VC firm for African focused businesses. She has helped facilitate fundraising and has provided advisory services to both startups and VC funds. And she's passionate about, supporting and enabling growth of innovative African startups. Our third speaker is Princess Edopai. Princess is the CEO at Sports. However, due to certain circumstances, Princess will be unavoidably absent today, but someone else will be taking a stead from Sport as well. Kenechukwu Uche. Kenechukwu Uche is the growth leader at Sport, and is also a Google product development mentor for students at the African Leadership University in Rwanda. So he has, vast knowledge on, helping businesses become productive and more strategic in their business operations, right? So we would get right into it, but give me a minute. I need to let some of our speakers in. Just give me a minute, please. All right, so okay, will be joining us soon. Let's just give her a few more minutes. The senior investment analyst at We Capital. All right. While we wait for them to join, I'll just get started with Samy. Samy, are you here with us?
Yes, I am.
Yeah, great. Okay, so I just have like my first question would be what are like some, because we're talking about funding options for startups and SMEs, and we know that part of some of the things that um VC firms look at before funding a business is how best they've managed their finances in the past. So can you like tell us some of the key financial management practices or strategies that startups in Nigeria should, prioritize for sustainable growth?
All right, very good question. Well, I think the most important is to build a very robust cash flow management system. One of the most important aspects of financial management, and it's applicable to startup and all kind of businesses in Nigeria and worldwide, is the management of working capital. It's really the key. In my opinion, is one of the best predictor of a company's survival. So the challenge is to ensure that your short-term assets can cover your short-term liabilities. It seems very obvious, I know, but many startups find it so obvious that they don't even implement anything, any system. And one day they face liquidity shortage. You can have the best product, the best service in the best markets. If you lack liquidity, you are doomed. So that's why I say it's a predictor of companies' survival. So I think the most important thing is to implement financial management framework that is adapted to your markets, to your industry, and to the specificities of your business. And I often recommend to use a very, very simple framework based on opportunities optimization and risk mitigation. I don't know if you, well, I'm sure that a lot of business owners and founders are comfortable with the SWOT framework. It's like the SWOT framework adapted to finance. And I think the more simple is the more usable and the best frameworks and tools. So if we take the example of a startup in Nigeria, if we look at opportunities optimization, how can you optimize, streamline your short-term assets? So your cash, your inventory, your account receivables. You have different options depending on your industry, your market, etc. You can, for example, implement subscription-based model to have more visibility on your revenues. You can incentive your clients to pay their invoice faster. You can invest a part of your treasury on saving accounts. And now, if you want to optimize your short-term liabilities, your debts, your accounts payables, you can negotiate with your suppliers to have better prices and better payment terms. You can outsource and automate a part of your internal processes to reduce your costs. This is for opportunities optimization. You take your short-term assets, your short-term liabilities, and you see how you can optimize it, streamline it, increase your revenues, reduce your costs. That's quite simple. Now, when it comes to risk, let's find a risk that is common in Nigeria. Currency instability, for example. I think it's a risk shared by all the businesses in Nigeria. How can you mitigate this risk so you can improve the management of your current assets and current liabilities? First, you can, for example, de-dollarize your expenses and relocate your expenses as much as possible so you can reduce your exposure to currency fluctuation. If you make revenue in Naira, it's better to have your expense in Naira as well. You can also think about exporting your product and services so you make revenue in other currencies. So it's also a good way to manage your cash flows and your working capital. So as you can see, it's a very, very simple framework, but it can lead to very strategic and operational decision. And as you said, Simi, it's something that is important for investors, but not only private investors. It's also important for banks. If you are looking for fundings, you need to show that you have a very strategic cash flow management, working capital management.
All right, thank you, Samy, for sharing that. So this is like a general overview of what you think startups in Nigeria should imbibe in their financial management processes. But looking at Bujeti, what are some of the out of all of these strategies that you mentioned? What are some of the strategies that Bujeti was able to use, and what helped Bujeti overcome funding challenges? What are some of these financial management strategies that Bujeti utilized?
I don't think if Bujeti itself is a good example because we are still early stage and we have a funding structure that is very specific. But I can share a story of one of my friends that is very revealing, and Bujeti comes up because it was used as a financial management tool to deal with these issues. So yeah, I think this story is quite revealing. I have a friend who launched a logistics startup providing eco-friendly transportation for companies, and her business was doing quite well. And one day she signed a huge contract with a large corporation. The problem was she did not have the operational capacities to meet the demand. So she needed to invest in new vehicles, hire new delivery personnel, etc., etc. And the second problem was that her new client, imposed her terrible payment terms, with the service being paid fully only several months later. So she was at risk of running out of liquidity. And this new contract could either make or break her, clearly. If she succeeded, her company will scale up significantly. If she failed, she would go out of business. Very simple. So what did she do? First, she negotiated with her other trusted clients to be paid earlier than scheduled. She secured payment facilities from her long-term suppliers who trust her. She developed a clear financial forecast and defined her funding needs for the next 6-12 months. And finally, thanks to all of this, a bank trusted her and granted her a loan to handle the situation. Where do I want to go with this story? You can see that a word comes up quite frequently in this story. This word is trust. And your financial management is a sign of trust for your stakeholders. It can be your clients, your customers, your providers, your investors, even your employees. So you need to instill confidence in your ability to create value. Financially speaking, I need to be convinced that if I give you 1 to finance your activities, you will turn it into 100.
Okay. Thank you, Samy, for sharing that. I hope we took down a couple of notes from what Samy shared. Okay. Please tell me that I'm not murdering your name.
It's okay.
Okay. Thank you for joining. Apologies for the here and there's that we had surrounding your joining. Yes, so you're here right in time. Following Sammy's response to the question asked, I wanted to ask you, what are some of the common misconceptions that startups in Nigeria have, around funding, and how well do you think these misconceptions can be addressed? Right. Samy mentioned a problem that they might encounter, which is like trust. But some startups also think that there are certain issues that are actually not issues, right? Around funding. So what are these common misconceptions that you've seen that are prevalent around funding for startups in Nigeria?
Okay. Thanks. But first, I need to introduce myself. My name is Ekpagha. I'm the senior analyst at We Capital. We Capital is an early stage VC fund, and we invest in pre-seed and seed stage companies. We invest between 200 and 500K, and we're sector agnostic, right? Some companies in our fund include Herconomy, MoneyPoint, Duplo, Mad, and we have a couple of others in our portfolio. So what are some misconceptions that founders have in the fundraise process? That's the question, right?
Yes, it is.
Right. I think the first thing is acknowledging the fact that founders usually are great builders, right? So they're great with maybe products or marketing. They sometimes are finance people, but that's very rare, right? And because they have such a big focus and expertise in a particular domain and in operations, there's certain things in the admin or the plumbing, as I'll call, finance or law or any of those things actually make up a company, or even people management, right? That they might be lacking. So I think what I tend to see is founders have a certain idea and they have a good sense of the dream of it. But in terms of how it works in the technical day-to-day or in the steps to getting there, there are a lot of gaps, right? And it's not deliberate. It's the process of building. It's really just a gap in skills or a gap in the people that they have. And these things would naturally come up in fundraising because, I mean, if I'm going to put money in a company, I'm going to be looking at all of the different, I would say, technical things. The great thing is at the early stage, we are prepared for those gaps to exist, right? So it's really a question of how well does the founder know their, how much domain expertise do they have and what potential for learning do they have? I think if those two things are missing, then you can't correct for a lot of other things in the fundraising or in the investment process, right? Just based on my finance background, I know that one huge thing that founders just tend to miss is their unit economics, right? So basically, for every $1 that you put into this company, how much money are you going to make on it, right? Because of how the I would say VC landscape has been over the past couple of years, there has been less of a focus on that, right? Because, hey, if you have enough money coming in, you can just keep fueling your growth and you don't have to think about the unit economics, because once you reach a good amount of growth, you can simply tweak your business model to get you to, gross profitability and eventually net profitability, right? But with the fundraise winter that we're currently in, we've seen that founders have had to adjust, right, in terms of thinking of how they're actually going to build sustainable businesses. And I think if there's one thing that's still missing, it's that adjustment, right? And it's a tough one because, as I said, the expertise might not be there. So yeah, I hope I've answered that properly.
Oh, yes, you did. Thank you. Okay, right. Yes. Thank you, okay, for sharing insights into that. So my next question will be based off of this feedback that you've given. How do you now properly evaluate the potential of a startup? Like if a startup comes to meet you today to say, oh, I'm interested in, or I need funding for my business, what are key things that you look at to evaluate the potential of a startup for investments, considering all of the unique challenges that businesses face in Nigeria?
Yeah, I think so. I tend to say that We Capital is a very sector agnostic company or VC fund. But the thing is, we found that there are certain sectors that have the potential for scalability than others, right? And that's a very, very key metric or key feature to look out for, because if you're going to invest, people say that VC money is like crack or is like cocaine, right? You're putting in that money to supercharge growth. It's not for slow growth. It's like you're currently here at 100,000 and I'm expecting you to 10x that in 5 years. That's a crazy amount of growth that is needed in a short amount of time, right? And the key thing that gets you there is a highly scalable business that has very low costs. Now, in the US and in other advanced markets, it's way easier for them to have scalable, it's way easier for them to have scalability across various sectors, right? But what we've seen is that scalability is mostly found in sectors like fintech, digital commerce, and SaaS, especially B2B SaaS. And then to an extent, you have scalability in other sectors like marketing tech, health tech, and there's one that's not coming to my mind right now, right? But the scalability is a key factor in what we look out for in companies, and also how much the tech works within the company. So I mean, if you build a SaaS product, right, the product has already been built. All you're going to do is just add, I would say, like new features to your product. It's not the same as maybe logistics, where you have to deal with the bikes, you have to deal with the current running of businesses, maintenance costs that just drive up your costs extremely high. And for every single dollar that you pump into the company, you're spending maybe 70-80% on growing the business, right? As opposed to SaaS, where it's like for every dollar that you put in, you're actually making like 90% of it back. So we're looking out for the market size. We're also looking out for the business model to know how scalable can this business get, right? Both in terms of the size, like in terms of the users that they have, and also in terms of the profits that they can generate, because that also contributes to the size that they can get to. And those are the key things. And then obviously we look out for great founders, great teams, because I mean, if you can't execute on a great idea, no matter where it is, like we're not going anywhere. And if we find that it's not going to be a fit, we also can't, move forward with the deal.
Thank you so much for that. So you mentioned scalability, you mentioned having a great team, great founders. You also spoke about how profitability and size is like very important. So I hope we're taking notes because these are gems that will not be dropped just anywhere. All right. So Samy, my next question is for you regarding so before I move to Samy, okay, do you think that poor financial management could also be a reason why startups, SMEs are not like funded, they don't receive the funding that they want?
Dicey. I think it's dicey first because of the question. So I'm just going to ask you a quick question back, right? So when I think about SMEs, I think about brick and mortar businesses, right? Businesses that like, I don't know, maybe it's a restaurant or cloud kitchen, or just a business that's doing good, right, but isn't necessarily scalable in the way that a VC funded tech business would be scalable. Does that make sense? So when I think of a startup, I think about a scalable business, right? So I'm curious to know, I'm curious to understand your question from that point of view, right? Because the things that I'll be looking out for in an SME will be different from the things that I'll be looking out for in a startup.
Okay, so can we talk about SMEs and talk about startups?
Okay. So in a previous life, I worked as a credit analyst. And the thing that I would look out for, because I mean, I'm giving out a loan, right? The thing that I would look out for, profitability. I mean, the first thing, so for a startup or as a VC, I'm looking at your top line and your potential for growth. As a credit analyst that is giving you a loan, I'm looking at your bottom line, that's your net profitability, and your capacity to pay me back the money that I've given you as a loan, right? Because I mean, VCs invest in potential, and people give out loans so they can get paid back and just make a certain margin on it, right? So I mean, as a VC, your I would say, or as an early stage VC, right, your financial management matters to me because it affects the sustainability of your business. But at the same time, that is something that can be fixed. If you're in a space where you can grow massively, and if you're also a founder that is able to learn or able to hire competent people, this is something that can be fixed over time, right? It can be corrected before we invest, and then it can be that the correction can be sustained over time as you move towards profitability and better efficiency. Because hey, as I said, a VC company is usually, a startup is usually focused on just supercharging growth and focused on building out a particular product, and that's very hard, right? Now, for an SME, if I'm giving you a loan or if I'm giving you an investment, I'm not expecting the same returns that I'll be expecting as a VC, right? So I mean, at that point, I'll be looking at your management, like your net profitability is already going to tell me whether or not you actually know how to manage your money, because that's how you're going to pay me back.
Okay, that's clear now. Thank you. Okay, Samy, over to you. I want to know, as a CEO, obviously, and as a previous CEO, you've come across like different aspects of business finances. What are like the biggest financial management mistakes that you think startups in Nigeria should try to avoid?
The biggest mistake. I think the biggest mistake that all startups and businesses in Nigeria and everywhere in the world should avoid is thinking that finance is just a support function in a company. In reality, if you see your company as a human body, money is like the blood, and the financial management system is the heart of your business. So managing finance for an SME or for a startup is central to me because it helps to analyze the past. Like the financial statements of your business is like your storybook. You can understand how you run your business thanks to your financial statements. It helps also to manage the present. The management, the financial management system of your company must be a performance enabler. It should help you to be more effective, to better use your resources. And finally, it helps also to anticipate the future. Thanks to financial projection, funding needs, preparation, investment capabilities, etc., etc. So yeah, the biggest mistake is the lack of discipline in financial management.
Okay. Samy says lack of discipline in financial management is like one of the biggest, which is obvious, biggest financial management mistake that startups in Nigeria make. Over time, we've seen businesses get funding, and then before we know it, money has been blown. Right, you're not tracking how much is going out. You're not tracking what money is being spent on, and how your business will become profitable. So yeah, thank you, Samy, for that. My next question would be can you share like a vivid example of a startup in Nigeria that, or let me call it a case study. So you're going to like just explain of a successful startup in Nigeria that got investment, and what are like key factors that led to that success?
Do you mean success in the company's growth or success in funding, like accessing funding?
So it goes both ways, like businesses that accessed funding, and then from the VC end, they saw it as like a successful investment because they were profitable. So can you give a business that, balanced both sides? Like case study.
Okay. I'm still not sure that I'm getting the question right, but I think what I'll answer is a business that we invested in, and it's kind of successful, right? So yeah, I'll just talk about Money Point. I mean, at the time when I think we invested in Money Point about 3 to 4 years ago, and at that time it was still called Teamapt. Right. They hadn't yet fully launched, their Money Points product and become like the behemoth that they are today. It was a successful investment on both ends, right? Sorry, the pop-ups are a bit distracting. So it was a successful investment on both ends because I mean, we found the company, and it was a conversation of, hey, like this is a round that we are interested in getting in because the founder Tosin had been running a financial outfit, that's Teamapt, for about a decade at that point. He already had the right partnerships with banks and financial institutions, already had the technology, already had the domain expertise, and it was a steal at the time. I mean, our models predicted this, like in terms of their growth and still more growth to come. But I think it's just been very interesting because I mean it's VC, right? 80-90% of your portfolio will fail. So I mean it's a great thing that they've not failed, and the metrics, right? The founder, the partnerships, the domain expertise, also the support from the other investors that were at the table. Those were, I would say, like key metrics that we looked out for. And we also think, those are things that have contributed to their continuous growth.
Okay, thank you. You already answered my question. You answered my question already. Thank you for that. Well, one more question. I will call you one more question because we might have like questions from the audience. Please, if you have questions, you can start dropping them under the Q&A section. So, okay, do you mind? Not do you mind? It's obligatory at this point. What trends are you currently seeing in the Nigerian startup ecosystem regarding funding, and how do you think startups in Nigeria can best adapt to these trends? Yeah, do you mind sharing some of them?
I think the first thing is there is a funding winter on the parts of LPs, DFIs. There's less money. On the parts of VCs, there are more stringent needs. I think the ecosystem has also evolved to the point where deals that seemed like a no-brainer, the people that have been in the ecosystem for at least 5, 6, 10 years are beginning to realize, hey, like, I don't think we were looking at this vertical or this particular types of deals the right way. So there's a lot more care in how deals are made, right? And a lot more thoughtfulness in how in approaching the deal investment process, right? And I think the effects of that are founders are maybe getting a bit more confused on what is actually being required, right, by the VCs. Because like before, if you're early stage, you're not being asked for traction, you're not being asked for anything. It's just, oh, I have an idea, and they give you money and you go build. But now VCs are more careful, and there needs to be a certain level of traction. There also is a lot more due diligence that's being done. Some VCs are asking for your CV and asking for your birth certificates. That's a joke, sorry. But yeah, like people are asking for things that they wouldn't have asked for before, right? And it can be a bit disconcerting for the founders because, hey, it used to be easy, right? But I think on the flip side, what we're also seeing, at least personally, from a deal sourcing perspective, it's also harder to find companies that fit the criteria that we're looking out for, right? Because, hey, you're looking for companies that have a bit of traction, that have gotten some level of, will I say, comfort in their product market fit. Not too much, but just, okay, this makes sense and this has the potential to scale. Then you have the, macroeconomic issues where money is just disappearing, inflation is at a high, everything is just mixed up in creating, I would say, a harder environment for founders to build very scalable businesses. But that doesn't mean that founders are not getting funded. It doesn't mean that conversations are not happening. It doesn't mean that growth is not being seen. If those things were real, I would not be working in this industry right now. So I think what I'm also seeing is a lot of founders have also been adapting to build sustainable businesses, right? Or to at least have sources of cash that can help them build their businesses as they continue to engage with investors on the startups that they're working on. I think also there's been a rise of, venture studios. I think Founders Factory has improved their venture studio program. There's also Fast Forward and a couple of others in the country that are focused on providing the right, support for idea stage companies, right? And then allowing them move up the value chain to where they can start getting invested in through pre-seed and seed stage companies. So yeah, I think that's the major issue that I've seen so far.
Thank you for sharing that. So based off this, what advice would you now give aspiring startup founders in Nigeria regarding funding and regarding this funding winter? What advice would you give them? What are key things that you'd say to them?
I'd say if you can, try to look within your network or reach out to people on LinkedIn, just to have an idea of, like, if what you're looking for is funding, just have an idea of whether or not VCs would be able to work with your model, right? I think a lot of founders are very interested in getting funding, but don't quite know how to navigate the landscape. So maybe your business is more suited for grants, maybe it's more suited for a loan, maybe it's more suited for simple angel and family, and if you manage it well enough, you'll be able to grow. Maybe it's not suited for VC, or maybe it is. But if you're not able to have the conversations at a very, very early stage, it can impact the way you build your business. It can impact the kind of conversations you have. And it can also impact the way you look at financial management, right? It's best to get, I think, that conversation out of the way as early as possible, so you know what type of business model you're focusing on and what type of financing you can attract, and you can put your energy towards that perfectly.
All right. Thank you. Okay. Thank you so much for sharing that. Samy, over to you. As we wrap up this webinar, what advice would you give aspiring startup founders regarding financial management for their businesses?
I like what just has been said. I will enlarge it not only for startups, but for also family business, SMEs and all. I learned something very important. I think it was the most simple thing I learned when I went to YC. The most simple, but the most impactful thing I learned there. Make something people want. Before looking at fundings, be focused on what you are building, what you try to build. If you identify a real market opportunity and you understand the business needs, the market needs, and you build something that people want, funding won't be a problem, I think. It can be VC funding, it can be loans, it can be grants, it can be whatever. But if you identify a real market opportunity, then funding will come. So maybe it's worth it to spend more time to talk to the market, talk to users, get customer feedback, understand exactly what is needed in the market. Then you build something and the money will come. That's my advice.
All right. Thank you, Samy. Samy said if you build something that people want, the money will come. Okay, do you agree with that? But yeah,
Actually,
I agree with you.
I completely agree. Yeah.
I agree with Samy. Thank you so much for sharing all of these insights. I'm sure that these insights will not drop from heaven. And this webinar was like very, very enlightening. Like I said earlier, if you have questions, please drop them under the Q&A section so that we can go over them and our speakers can answer them swiftly. Before we wrap up this webinar, if you, like Samy has mentioned before, okay, joined at all, that management of cash flow is very important for businesses in Nigeria. And if you're looking for a solution that, provides end-to-end cash flow management for your business and gives you like 100%, when I say 100%, I mean 100% insight into how much money flows in and out of your business, then Bujeti is your best bet. Like, Let me sound like all these Gen Zs, no cap. Bujeti is your best bet. When it comes to pricing and all the features that we have to offer, we are your best bet when it comes to financial management. So if you have questions, you can always reach out to us. And for people that joined this webinar today, we have some freebies for you. Sign up on Bujeti today and enjoy 1 month free usage. Just use Okay's name as your referral code. I'm joking, but yeah, you get 1 month. Just say, "Oh, I attended the funding webinar," and you just get 1 month free usage of platform to explore every other thing that's all of the features that we have to offer you. Somebody asked a question. Osa says, what's the best way to secure funding connected to SDGs? So if I get your question correctly, you probably run an NGO focused on one of the SDGs. So he or she's asking, what's the best way to secure funding for an organization like that? So, okay. Over to you.
Right. So in another life, I volunteer a lot. And I've come across this thing called grant writing, which apparently is a full-time job for a lot of people. So I would say if you run an NGO, you're basically looking to get a grant, right? And the first step would be to, I don't have expertise in grant writing, but the first step would be to look for people. LinkedIn is always a good bet. That actually do this on a day-to-day. They'll be able to give you links to where you can find the best grants and also how to write the best grants, and then also events to meet with people that, like, companies that that offer grants, right? I'm not sure if there are any other NGO sources, like of NGO revenue sources or funding sources that come to mind. But yeah, I think that's the best bet. Samy, do you have any thoughts on this?
Well, it's not really linked to my expertise either, but the good thing with grants is that people who are granting money always communicate on it. So I'm sure you can find a lot of information, especially with governments, international institutions that communicate a lot based on your mission. You can find information regarding where the money is. Then it's also a good bet to work with someone who did it already, because asking for grants is like a specific job. You need to follow a specific methodology to make sure that you are aligned with the mission and the vision of the people who are granting money. So yeah, that's the only thing that I have in mind regarding this question.
Okay, thank you, Samy, and thank you. Okay, I completely agree with you. And to add to what Samy said, people giving money for NGOs are always talking about it. So just find where they are talking about it. There are platforms where they announce grants when they want to closing the application window and everything that you need to know. Just find that platform and then you'll be bombarded with bombarded with information on different grants available to people, NGOs, and again, tell your story well. It's one thing to have like a great idea, and it's another thing to be able to tell your story such that they'll be moved to want to offer you this grant. So yeah. Someone else asked the question goes like this: LinkedIn has come up a few times as a platform where people can find VCs, grants, and other things. What search criteria would likely produce the best outcome? Samy, I think this question should go to you.
Well, I'm not sure if it's the real question for me, but in terms of fundraising, I'm not sure that LinkedIn is the best way. Okay, you'll confirm if I'm right or wrong, but in my opinion, the best way to find fundings is introduction. It's very, very hard to, even contact a VC fund through LinkedIn or email or whatever, you need to have a proper introduction. If you want to be credible in front of a VC, you need someone who say, okay, this guy is coming from me, so you can discuss with him. What do you think?
Yeah, so LinkedIn is a dicey tool, right? I know I mentioned LinkedIn a couple of times, and that's because, I mean, in my line of work, a huge chunk of what I do is reaching out to people and just having conversations across various industries, right? But as Samy said, when you're approaching a VC, it's a different conversation, right? And it's a lot tougher if you're just cold emailing or, just reaching out to people coldly via LinkedIn. But I would say this, right? If you already have the networks that you can leverage, then leverage those networks to get your warm intros, right? I mean, go for the right events, meet with people, stay in touch. Those are important. But I've also found that sometimes people respond on social media, Twitter, LinkedIn. We've actually found a number of companies that we've spoken to through Twitter and LinkedIn, right? And that's because we have a very, I would say, we're always just looking out for businesses and we just try to keep in touch with the ecosystem. It's not a generally done thing where a lot of people respond to their DMs, but I think the real thing is increasing your surface area for luck, right? In terms of search criteria, I really don't know that I can say. If I'm looking for people that write grants, for instance, I didn't even know what a grant writer was until I just started searching for grants on LinkedIn. And I found that, oh, there's actually a job title called grant writing or grant writer. I mean, it depends on what you're looking out for. You just keep filtering it, and then you click on connect and you add a note and you send it and you hope that the person responds. Or maybe when they actually connect, you send a message. I don't know, you just increase your surface area for luck. You look at the particular, maybe it's VCs, you create a list of all the VCs, you look out for events, you see if there's anyone that you went to school with. You just find people. That's the work.
Right. Toby, I hope this answers your question. Okay, says increase your surface area for work. So just expand your search and hope that luck finds you. I think this will be our last question before we call it a day. Sheon says a lot of times when startups fail, we see that it's due to governance issues. What do your firms do in terms of ensuring corporate governance in companies you invest in? Okay, this is okay specific. Let me call that an okay specific question. So please go ahead.
Yeah. So I mean, we sit on several boards simply because we're investors in several companies. And we tend to get monthly reports and also stay very tightly in touch with our founders. We also have a pretty small portfolio. We have about, I think, 23 companies in our portfolio. So we give quite a significant amount of attention to the companies that we work with. During the board meetings, we're sure to point out anything that we think is a bit funny. So far, thankfully, we haven't had any major issues that we've not been able to deal with, either as a firm or working with other members of the board. I'd also say that there's a distinction between early stage VCs and growth stage VCs, right? Growth stage VCs tend to have way more stringent, I would say, approach as opposed to early stage VCs, because, hey, at the early stage, the founders are still building. They're still trying to wrap their heads around what a business really needs. And what we're providing most of the time is support and guidance. At the growth stage level, obviously, there's a lot more structure and there's a lot more corporate governance as it should be. So yeah, I hope that answers your question.
Sheon, I hope this answers your question. Just know that if you have more questions, you can follow We Capital across their social media platforms. Probably connect with OK, and luck will find its way to you, and then she'll open your DM and answer you. But yeah, if you have more questions, do well to follow We Capital, connect with OK, and she'll most likely be ready to answer your questions. Also follow Bujeti, very important. Connect with Samy if you have more questions around financial management, and you'll be very open to answering your questions. We don't have any more questions here, so I think we're done. Yes, I think we're done with questions for now. Thank you so much, everybody, for joining. I actually gained a lot. So if I'm starting my startup tomorrow, Samy, no offense. I know that these are some of the things that I should be taking into consideration. Thank you so much, okay. Thank you, Samy, as well. It's a public holiday and you took out time from your rest period to join this webinar. Like I said, the recording will be available to everybody that attended, and people that didn't have time to attend or registered. It would always be available. This is bye from me. Funny enough, I didn't introduce myself. I'm so sorry, everybody. My name is Samy. This is bye from me and Samy, and okay, you can see your byes. They will call it a day.
Thank you very much.
Yeah, thanks for having me here. Hope you have a lovely.
Yeah, you too. Bye, everybody. Bye.
Bye.